Chapter 18, ratio analysis. When we talk about ratio analysis, it's simply talking about the measurement in the financial statement. All what we've talked about previously in the financial statement, all the items we've talked about in the financial statement, we put them together in analysis. That is why we have, I said your hands off the laptop. That's why we have ratio analysis. So part of the ratio analysis is the financial ratio. For financial ratio, it is the measurement of one item in the financial statement divided by another item in the financial statement, which means whatever item you have in probably in the statement of profit or loss account, you divide it with another item in the statement of profit or loss account. That is the financial ratio. The measurement of one item divided by another. That's what we call financial statement or ratio. The first financial ratio we have is the profitability ratio. Why do we call it profitability ratio? We call it profitability ratio because it measures the level, the extent of profit we make. So for profitability ratio, it measures how profitable a business is. And when we talk about how profitable a business is, there are two ways. The measurement of the profit we make this year compared to that of last year. So that shows how performing we are. So if we made 5,000 this year, last year we made 3,005. It means we are excelling. It means we are doing better. That is one way. The other way is comparing the profit we make this year to those of our competitors. We want to know how well we are compared to those of our competitors. So when you are measuring the profitability of a business, you can measure it based on your previous profit or to compare those of your competitors to know where you are amongst your competitors. Do you understand what profitability ratio is? Profit is total revenue minus your total cost. That is profit. But the point is, you need to know if you are doing well or not. To know if you are doing well or not, you can compare your present result with your past result. That means your present profit compared to your past profit, number one. You can also compare your profit, the profit you make now, to those of your competitors. So to know where you are when compared to your competitors. That's why we need profitability ratio. Do we get profitability ratio? Yeah. So for profitability ratio, we have two. We have the gross profit and the net profit. For gross profit margin, it's simply talking about the gross profit as a measurement of the revenue multiplied by 100. Gross profit as a measurement of your revenue multiplied by 100. So that means what we make in the course of selling our products, excluding expenditures. That is what gross profit margin is. Remember, gross profit itself is gross profit equals to sales minus cost of sales. This is our gross profit. So if we want to find the margin, it means this divided by this multiplied by 100. Because this is the formula for gross profit.
Wait, so sales divided by profit?
Sales minus cost of sales gives us this.
Okay.
So if we need the percentage of this, it will be the percentage of this on sales. The percentage of this on sales.
Yes.
Do you get it? Do you get it or not? This is a margin which talks about how closer are we to making profit or how far away we are to making profit. We cannot make profit without selling a product, yes or no? So it means we make profit because we are selling. So that means whatever we sell should be based on the profit we make. So to get our profit, we need to sell and we need to analyze our cost on sales, which are the amount we spend to ensure that the product is made available for sale. That's our cost of sales. How much did we actually sell? That is our sales. So how much we actually sold minus the amount we spent to sell that product we actually sold is our gross profit. So gross profit is sales minus cost of sales.
Yeah.
Now, we want to know the margin in percentage.
So
to know the margin, it has to
revenue.
be the gross profit over the revenue,
That's
through the
right.
measurement of the revenue. So that gives us gross profit margin, which is gross profit, which is sales minus cost of sales, divided by revenue, which is the amount of money, the receipt on what we sell, multiplied by 100. That's gross profit. But the business does not end here, because the business is expected to incur different expenses. So those expenses are called overheads. So for the overheads, that is where we have our net profit margin. So net profit is, for net profit, it's gross profit minus revenue. I just keep Gross profit minus expenditures. So this is our net profit, which is the profit for the year. Net profit is gross profit minus expenditure. We did that before now. So to get our net profit margin, note, you have to pay tax. But before you pay tax, you need to understand, you need to analyze your profit. Because tax is charged on the profit made by the business. The tax authority does not need your profit, they don't need your net profit, they need your net profit before tax.
Tax is expenditure.
Tax is not, it's a compulsory payment.
Isn't gross profit the profit without cost?
Without expenditure. Gross profit is profit without expenditure. But the business does not end there. The business has overheads, the day-to-day running of the business. So whatever you sell, you have to pay workers, yes or no? You have to pay electricity, yes or no? All these are expenses that are incurred after selling. So you have to take it away from your gross profit. That gives you your actual profit. So your actual profit is what you get here, which is, where's my net profit margin?
Above. Here.
Yeah, before tax. So this is what you present to the tax authority, where you now be charged a corporation tax. Do you get the point I'm making here? There's a net profit margin, which is net profit divided by revenue multiplied by 100 before tax. So that amount you get, net profit before tax, is what you present to the tax authority, where they're going to charge you your corporation tax. Not on your gross profit. Not on this. Gross profit is just the profit you make from sales, which is your purchases, your opening stock, your carriage inward, your return inward, your return outward. All these items, they only make you to sell. Then you are making profit. But the profit doesn't end there. You have to understand that you have workers that you have to pay. You have rent that you have to pay. You have transportation you have to pay. You have lighting you have to pay. All these things you have to pay them. You take them away from the gross profit. That is your net profit. Do we understand?
Yeah.
Any question about net profit?
No.
So the net profit margin is always what? Net profit divided by revenue multiplied by 100. Is that all? Is that clear? So that is it clear, please?
Yeah.
That is profitability.